Tensions escalate as the U.S. reimposes a naval blockade on Iran, driving oil prices higher. In the financial world, TSMC reports record earnings, while Netflix prepares for its quarterly results. Here are today's top 10 stories you need to know. Despite the recent volatility in markets, Wall Street banks are showing resilience. Analysts are observing how major financial institutions are managing risks and adapting to changing economic conditions. As interest rates fluctuate and economic signals vary, banks are leveraging their positions to navigate uncertainty effectively. This resilience is crucial for maintaining investor confidence in the broader financial system. The market is keeping a close eye on earnings reports from these institutions as they reflect the overall health of the banking sector. Moving forward, it will be vital for banks to continue demonstrating their ability to adapt and thrive amid ongoing economic challenges. Stakeholders are looking for signs of strength in the financial sector as they assess potential investment opportunities. European markets are bracing for potential shifts as they react to the Federal Reserve's recent statements on interest rates and inflation. Investors across the continent are weighing the implications of a potentially prolonged period of uncertainty in U.S. monetary policy. As data continues to emerge regarding inflation trends, European stocks are likely to experience volatility, reflecting the sentiment from the U.S. Fed. Analysts are particularly focused on how European central bank policies may align or diverge from the Fed's approach in the coming months. This situation is creating a cautious atmosphere among European investors who are looking for signals that could indicate future economic stability. The interplay between U.S. and European markets will be critical as global economic dynamics continue to evolve. Asian markets are experiencing dramatic movements as investors react to global economic signals. Recent news out of the United States regarding inflation and interest rate policies has triggered a ripple effect across the region. In Japan, the Nikkei index is showing signs of strain from the Bank of Japan's tightening measures aimed at combating rising inflation. These developments have led to increased volatility, with other Asian markets fluctuating in response to U.S. market performance. This interconnectedness underscores the importance for regional investors to stay alert to international developments that can influence local markets. Analysts note that key economic indicators from both the U.S. and Japan will significantly shape investment strategies moving forward. The current volatility may present both risks and opportunities for savvy investors who can navigate this shifting landscape. As central banks reassess their policies, investors may need to adapt quickly to capitalize on emerging trends and mitigate potential losses. SpaceX shares have dropped below their initial public offering price for the first time, raising concerns among investors just weeks after a record-breaking IPO. This decline comes amid fears regarding a potential lockup expiry, which could unleash a wave of selling as early investors look to cash in. Analysts are labeling this a confidence test for the market, as the once celebrated IPO now faces increased scrutiny from financial experts and investors alike. The sell-off underscores a growing caution among investors in the high-growth tech sector, potentially impacting sentiment for other recent IPOs, particularly in the aerospace and technology industries. If the selling pressure persists, it could signal a bearish trend for SpaceX's stock, possibly leading to a retest of lower support levels that could shake investor confidence. The performance of SpaceX shares in the coming weeks will be crucial in determining whether this IPO can recover or if it will serve as a cautionary tale for future market entrants, setting a precedent for upcoming investments. Recent interest rate hikes by the Bank of Japan are negatively impacting nearly half of Japanese firms. This shift in monetary policy, aimed at curbing inflation, has resulted in higher borrowing costs, which are squeezing profit margins and discouraging essential capital investments across various sectors. Historically, low interest rates have supported Japan's economy, but this tightening could lead to a slowdown in corporate earnings, raising concerns for investors. The Nikkei 225 index has already shown signs of slipping due to these economic pressures, further compounded by rising tensions in the Middle East, which have added uncertainty to market dynamics. Analysts are now predicting a potential downward trend in Japanese export-heavy stocks as firms grapple with increased operational costs. The immediate future looks challenging as companies may delay expansion plans and cut back on hiring. Investors and analysts will be closely monitoring these developments as they could significantly shape Japan's economic recovery and growth outlook in the coming months. Netflix is preparing to unveil its quarterly earnings, a highly anticipated event that carries substantial implications for both the tech and media industries. As a leading entity in the big tech arena, Netflix's financial performance will be closely analyzed for key indicators, particularly subscriber growth and the effectiveness of its recently launched ad-supported tier. With increasing competition in the streaming space, this report will shed light on Netflix's ability to retain and attract viewers. Investors have already begun positioning themselves, buoyed by rising stock prices in major tech companies like Amazon and Alphabet, reflecting optimism for positive outcomes. If Netflix surpasses market expectations, it may serve as a catalyst for momentum across the broader Nasdaq 100 index, potentially uplifting other tech stocks. Conversely, disappointing results could lead to a reassessment of valuations, impacting investor sentiment negatively. The outcome of this earnings report will not only shape Netflix's immediate future, but may also set the tone for the streaming landscape. Investors will be particularly keen to gauge Netflix's strategies moving forward. Federal Reserve Chair Kevin Warsh has recently emphasized his commitment to reducing inflation, yet he has refrained from detailing specific policy measures. This silence comes at a pivotal moment, as recent reports indicate cooling inflation data, leaving financial markets grappling with uncertainty. The Fed is exercising caution, seeking further evidence of economic trends before making any adjustments to interest rates. This approach reflects the delicate balancing act officials must perform amid a fluctuating economic landscape. The latest data revealed a surprising drop in wholesale prices, which temporarily boosted stock prices, but this optimism is tempered by concerns over rising oil prices driven by geopolitical tensions. Investors find themselves in a precarious position, weighing the potential for an AI-driven economic boom against the risks of inflationary pressures. As the Fed prepares for its next moves, upcoming economic indicators will be critical in guiding their decisions. Analysts anticipate that the Fed may need to act decisively in the coming months to maintain economic stability and foster sustainable growth. In a bold move, PayPal has made headlines with a proposed $53 billion acquisition offer, sending its shares surging and stirring excitement in the fintech sector. This substantial bid represents a significant premium over current market valuations and suggests a potential wave of consolidation within the competitive landscape of financial technology. Established in 1998, PayPal has long been a leader in digital payments, but this ambitious bid reflects its strategy to diversify and strengthen its market position amid rising competition from emerging fintech startups. Investors are reacting positively, with U.S. stock index futures edging higher as they digest the implications of this news. Analysts believe that this acquisition could trigger a series of mergers and acquisitions throughout the tech space, reshaping the industry's dynamics. The technical indicators suggest that PayPal stock could experience a gap up, testing upper Bollinger Bands in the coming days. Traders will be looking for volume confirmation to sustain this upward momentum. As the fintech landscape evolves with bold offers, the implications for competition and market dynamics will be profound, potentially reshaping the future of digital finance. PayPal's strategic moves may redefine industry standards in the near term. Taiwan Semiconductor Manufacturing Company, or TSMC, has reported a staggering 59% surge in net profit for the second quarter of 2026. This remarkable increase is largely attributed to an unprecedented demand for AI infrastructure, driven by advancements in machine learning and data analytics. TSMC has now achieved 5 consecutive quarters of record earnings, underscoring its dominant position in the semiconductor market. The company has also raised its full-year revenue and capital expenditure guidance, signaling strong confidence in future growth and its ability to meet escalating demand. This exceptional performance has had a ripple effect on the technology sector, significantly boosting stocks like SK Hynix by 13%. Investors are now flocking to semiconductor ETFs, encouraged by TSMC's results, which validate the ongoing AI boom narrative. The technical outlook for TSMC's stock indicates it may be testing new highs, reflecting heightened investor optimism. With the global demand for AI technologies only expected to rise, TSMC's performance could signal a broader sector-wide breakout. As companies ramp up investments in AI capabilities, the semiconductor industry is not just poised for growth, but is likely to enter a transformative era, setting the stage for innovation and competition in the years ahead. Oil prices have surged by 2%, reaching a 4-week high as the United States has reimposed a naval blockade on Iran. This blockade, which aims to curb Iran's oil exports amid ongoing tensions, has raised alarms about potential disruptions in oil supply through the critical Strait of Hormuz. This waterway is vital as it facilitates approximately a fifth of the world's oil supply. The geopolitical situation in the Middle East has a direct correlation with energy markets, as fears of supply shortages can lead to increased costs for consumers across the globe. Investors are now closely monitoring the situation, particularly as this escalation could threaten the previously cooling inflation trend. The market reaction has been largely risk-off, especially for equities sensitive to energy prices, which have seen increased volatility. Analysts suggest that if the blockade continues, oil prices could test the $90 to $95 per barrel range, significantly impacting global economic stability. This situation is developing rapidly, and market participants are advised to remain vigilant as the international community responds to the rising tensions. The potential for an extended conflict could create long-term volatility in energy markets, with ramifications for both consumers and industries reliant on stable energy prices. Looking ahead, traders should prepare for further fluctuations as geopolitical developments unfold in the coming weeks. Thank you for watching. Which story surprised you the most? Let us know in the comments. Don't forget to like and subscribe for more updates.